All right, so there are plethora of funds available in the market to invest your hard-earned money in, but then how do you assess which is the right fund for your portfolio? What are the criteria that one should be looking at? And to help you navigate through this maze, today I have with me Anil Rego, founder and CEO, Right Horizons. And just in case you're watching our show live, once again, let me flash you the WhatsApp number that we have, which is 865-797-4571, and our email ID, themoneyshow@etnow.tv. Hi, good evening, and welcome to the show, Anil. And let's begin our question and answer session. I will take Palak's question first, and she's asking this question via email. She's writing that how can she assess the right time to book profits in a mutual fund? While she understands the rationale behind choosing the category of funds, she would like to understand the process of choosing an AMC. If past returns cannot be trusted, how should I choose the fund? Also, is it necessary to rebalance your portfolio annually? And she would like to invest 50,000 in 4 funds for a period of at least 10 years via STP. And what should be the fund mix, and should she be considering an index fund? How much corpus can be generated, and she can add or step up 10% every year. Interesting question. I really wish I had Palak on the phone line with me, because these are some basic information that investors should know before taking their first step towards investment or their investment journey. All right, so let's take it one by one. Anil, what do you say? How can you assess the right time to book profits in a mutual fund? Now, this question can be answered, typically if you have a financial goal with which you've tied up a mutual fund, the kind of strategy you might have opted. But for someone who is just new to this investment journey and who doesn't understand how mutual fund works or doesn't understand how to line up your financial goals, how can you decide when to book profits then?
Yes, definitely. I think you need to look at your goals as the first point. And so, in line with your goals, if let's say you have a need which is coming up, let's say 1 year from now, then it makes sense to say get out of equity and book profits and sort of move to debt. So, that can be one reason why you book profits. The second is, let's say if you think that a particular segment, like we've seen, say, small caps has done exceptionally well. Okay, and if it has really been, very, very, a lot of alpha, if you see that, and you've achieved some of your targets that you're looking for, then I think profit booking is possible, and may also make sense. We do that on a periodic basis when we find that a particular either the large caps go off completely to a different momentum, or the mid caps go off to in a different momentum, and that could be one time that you sort of go and look to book profits. Ideally, you look to book profits when the going is good. Right now that there's been a bit of a correction, I'm not sure it may be the right time to book profits at this point of time. Maybe if there's a pullback and stuff like that, then you could do it. But I would think at a time like this, maybe
One
there's
question over
the
here, Anil.
volatility.
Anil, just one
Yeah.
question over here. You can also book profits if you've already made a profit in a particular category. Like, for example, nowadays investors are seeing good amount of profit in mid cap or small cap categories, and you have to rebalance your portfolio because you need to be very well diversified. And that is also one of the questions that Palak has. Maybe you're booking profits in mid cap and small cap, but then you need to just, if it's a rebalancing strategy, you might just want to put that money in large cap. So booking profits in order to diversify your funds across market caps can be a good one.
Yes, and also what happens at times, like if you look at the last few years, mid and small caps have done well, and you plan to put say 20% or 25% into say mid and small caps, but because of the relative outperformance, you may find that it say goes to 35%, right? So that's another reason, that another way to do it in a systematic way, not too often, which is why she asked what are the frequency. I think annually it's a good idea to look at it, to review and not necessarily rebalance. Review all your portfolio, review your stocks, I mean mutual funds, see whether allocations are going out of sync with what your risk profile is, and then you can make the changes. You'll also go back and see if any of your funds have been underperforming, and maybe consistently as well. So those are the cases where
Right.
you look at it and focus on maybe funds which are not doing as well. Okay,
So
of
this
course,
rebalancing should be
in
done. So this rebalancing should be done annually or every 6 months.
I would say annually. Annually is a good time to look at it. Okay,
Okay.
because too often also, like, you're investing in a mutual fund which is anyway being managed, right? So if you're doing stocks, I would say maybe once in 6 months, but on a mutual fund, I would do it annually.
And what should be the criteria before selecting your mutual fund or your mutual fund strategy?
Yeah, so I think there are whole things that you need to look at, because one of the things she asked is on how to choose an AMC itself, right? So when you're looking at the AMC, first of all, you will look at, what are the fund metrics of the various, categories, okay, to start with, because the scheme is the next level. So whether the particular AMC has funds in various categories, how are all of them performing? Not only look at risk, not only look at return, but also look at risk parameters. Because sometimes you may find that some of the funds may do very well in one segment of the market, and you may find it's doing well and get into it when you see the volatility coming. So that is one aspect. The second aspect is looking at what are the categories that they have. They if you're looking, for example, a balanced advantage fund, or you're looking at let's say a mid cap or small cap, then do they have I'm sure they will have some many of these categories, but do they have good funds in these categories? Okay. The third is about, I think risk management is something that I always like to look at and look at it for funds. And you will want a fund which is also managing risk. So go back and see how the fund has done, in different market cycles, and then look at the also the fund or the fund house. You would look at fund
Right,
managers that the AMC has.
right,
What are their
right,
expertise, across strategies, and also of course
right.
fees and maybe
Right,
service,
Anil.
etc.
Right. So Anil, I have one more caller waiting on the phone line with me. What other funds are you recommending, Palak?
Yeah, so for Palak, I would think that do a combination of HDFC Flexi Cap. You can look at HDFC Balance Advantage to provide comfort. Okay, ICICI Pru Blue Chip and Nippon India Small Cap.
Right. Let's move on. I have Suresh from Hyderabad on the phone line waiting for us. Suresh, hi. Good evening.
Yeah, hi ma'am, good evening. This call is
All
now
right. So
being
10
recorded.
years and 5 CR. Is that right?
Yes, yes, exactly correct.
Okay. And you've been investing since last 3 years. So what's the portfolio status now? Are you happy with the return that you're seeing in your funds, specifically small cap?
Yeah, so currently, I'm happy with the results from my portfolio, but since 1 week the markets are crashing, right? So before 1 week, I've got around 20 plus CAGR, but now it's 9%. So I just want,
So you check your portfolio
to
every
review
day, is
my
it?
portfolio.
You check your portfolio every
Yeah,
day?
correct. Yeah,
Why?
yeah.
Your stock portfolio is something that you might want to review every day, but when it's a mutual fund, maybe once in 6 months, or Anil might just say that once in a year can be a good time for you to review, because funds performance, you really need to give it some time. Acha, how are you feeling with are you happy with your Access Small Cap returns now?
Yeah, yeah, I'm happy with that.
Okay,
So it
okay.
is giving me around 17% now.
Okay, okay. Just on the basis of 1 week performance, I really don't think that's the right time frame to look at a mutual fund investment and decide whether you should be exiting a fund. But then, yeah, let Anil explain this to you. I'll just read out your funds. Quant Small Cap, Axis Small Cap, SBI Balance Advantage, you have UTI Nifty 50, Tata Digital India, you've got Nippon India Small Cap also, and Parag Parik Flexi Cap. Okay, and you also have some in lump sum investment done in meta asset small cap 250 momentum 100 FOF. Any specific reason why you chose this particular fund for a lump sum investment of 5 lakh?
Actually, I've got this advice from one of the financial advisors, so that is the reason I just invested.
And this is going to be for how long? This investment for how many years?
This for the next 10 years.
Next 10 years. Okay.
Yeah,
You do understand the volatility attached to a small cap category.
correct. Yes, yeah.
Okay, perfect, perfect. Anil, over to you.
So let me, step back and say what are the two, three places that maybe one is uncomfortable with. Of course, at a point like this, I would believe that, I would not do any exits right now because, like you said already, it's given away a lot of its returns. And maybe continue with the systematic investments. And I think you are buying in at lower prices. If it goes low, the lower it goes, the cheaper you get, right? If you're looking at it on 10-year basis. So from that standpoint, I would not, do much out there. Okay, what if at all one may do a few things is, look at today we have a Tata India Digital India Fund, which is a, thematic fund. Typically, I would not want to do, a sectoral fund, and you rather give it to a manager who then decides where to allocate. Because otherwise, one has to be able to track and see when should one get into a particular sector or when should one get out of a particular sector. Unfortunately, I think one has a bit of a view on momentum because momentum did very well for a period of time, and so and one believes that as one goes forward, possibly quality and other themes will sort of pick up, and which is why one had put it on a exit list, basically mere asset small cap momentum, and the other is if one looks at access small cap, I think one believes that you have better strategies, better schemes in the small cap in the same category which one could consolidate. Which was the other point that one was also looking at. You already has say a Nikon, so maybe keep that is what the view. But like I'm reinforcing, don't do anything right now because it's already given off and on an uptick you could probably do. The other part is whether you want to, because looking at 10 years, do you want to do an active fund on the large cap side versus let's say UTI Nifty 50? Those are the few places that one thinks that we could look at.
All the best, Suresh, with your investments and the changes suggested to you right now. Time for a short break, but then post that, we'll be taking Raghu's question, and we also have Kalyan's query that Anil needs to answer. And I'm also flashing our WhatsApp number and email ID where you can send across your questions. See you after this break. Welcome back. You're watching The Money Show, and I have with me Anil Rego, who is answering your portfolio queries today. And now I also have a viewer, Mr. Gopinath from Hyderabad. A lot of questions coming in from Hyderabad today. Gopinath, hi, good evening.
Hi, good evening.
I was just going through your details, and I just want to know, sorry for my low knowledge over here, but then a solution architect in an IT organization, what exactly would be your role? Because this sounds super interesting.
So I'm working as a solution architect in Cisco.
All right. So you try and fix problems in an innovative way. Is that how you would call it in basic layman language? The role.
So basically, I design a solution platform using Splunk.
Okay.
Splunk is a software. So for data analytics, cyber security, machine learning, and all.
Wow.
So I am a solution
Very interesting. Very interesting, and that's a new information for me and also all the people hearing you out there, including my PCR. Okay, so congratulations for the newborn, and you have kept two goals, higher education for your newborn and your retirement goal. So everything is coming within 20 to 22 years. Have you calculated it right?
Yes.
Perfect. Okay, so... Yeah.
I calculated based on my present age and my requirement to be a retirement, as well as for my kids' higher education. For that, I would like to do an SIP.
Okay, I've got your funds detail. Nippon India Small Cap, Navi Nifty Next 50, Quant Mid Cap, Motilal Oswal Flexi Cap. Okay, you are getting negative returns since when?
Yes, from last 6 months.
From last 6 months. Okay, quite expected. Any specific reason why you decided this fund selection?
So basically, I just follow the ET show as well as some other YouTube channels related to mutual funds. And based on my recommendations and previous track record of the performance of these funds, I would like to diversify one fund for each AMC and then for each category. So out of that, I decided these funds, which are having a good track record in previous years.
Sure.
And now
Sure.
Nifty in S50, why I choose, because it is a index fund, and that too it is having low expense ratio. That is the reason I chosen that fund as a large cap.
Okay. In terms of diversification, I think your portfolio mix or your fund mix is really good. But then let's see how can you diversify it further, because you also want to step up your SIP by 5 to 10%. Anil, what would you recommend?
Yeah, so I think if you look at the risk return metrics, and also looking at the categories, actually I would be a little more comfortable with, let's say, a managed fund in the blue chip, like let's say an ICICI Group blue chip fund, right? As in lieu of say Navi Nifty 50, right? Nifty Next 50, I think. Right. So to that extent, something like this may, deliver a little alpha also versus the index, and keeping in mind that, he has a long-term perspective. Now coming back to his overall, objectives that he has, one of which is retirement, and the second is, which is, his child's higher education. Uh, Actually, we don't have numbers there. So maybe we can ask him, what are the numbers that he's looking at, for these particular requirements.
Sure. Gopinath, what is the expected corpus? Yeah.
I would like to have a corpus of 10 to 12 crores for the next 20 years. So more than that also would be fine.
All right. You will also may have to increase your investment amount. So you wanted 12 crores, because 10 to 12 crores, it had a difference of 2 crores. So, accordingly, Anil will calculate the per month investment that's needed. So let's aim 12 crores. And Anil, how much should be per month investment for that?
So I'll have to compute the exact one, but offhand I can say it will be somewhere around 55,000 rupees, per month, right? If he is looking at for that period, and then that should take care of his retirement need, right? Of course, he also has his child education, and I'm assuming there, if he wants to set up about a 25 lakh type of corpus there, then again he would need to maybe make another about 10,000 rupees or so to be able to take care of that one as well.
So that sums up your question. 50 to 55,000 per month is what is needed. You can increase or step up your SIP as and when you're comfortable. Thank you so much, Gopinath, for sending us your question. And it's time up on the show as well. Anil, thank you so much for being on the show and helping our viewers with their financial portfolio queries today. And before I sign off, I'm going to leave our viewers with our WhatsApp number and our email ID. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.